A volatile trading session Friday as President Trump took aim at China but did not go as far as feared. He did not mention any new significant sanctions or any plans to walk away from the Phase 1 trade deal. After spending most of the day in the red, the S&P 500 and the Nasdaq perked up by the end of the session, but the Dow languished. Stocks marched higher in May and have now bounced roughly 40% from the low set in March, but a showdown between the world's two biggest economies is likely to add to market gyrations, says Jim Kahn, Chief Investment Officer at Wealth Enhancement Group.
It's unlikely that this is a Cold War that will turn hot. We're not going to point nukes at each other. But it is likely dangerous in the sense that a lot of the prosperity we've had by sort of leveraging and integrating supply chains, integrating markets, that's going to come undone. And if that comes undone and we have competing economic spheres of influence between the United States and China, that's really not to anyone's benefit.
Meanwhile, a reminder of the depth of the U.S. economic downturn. Consumer spending saw its biggest nosedive on record, plunging 13.6% in April, and in a separate report, factory exports tumbled to a 10-year low. Investors hope the numbers won't get much worse now that states are moving ahead with their reopenings, but Federal Reserve Chairman Jerome Powell says he's standing guard just in case there's a surge in new cases.
I think a second wave would really undermine public confidence and might make for a longer, a significantly longer recovery, a weaker recovery.
Tyson Foods had to shut down one of its meat processing plants after 22% of its workforce at the factory came down with the virus. Shares of Tyson Foods finished lower.